Welcome, everyone, particularly you, Baldrick, to another public session with Down Under Trading. Today, we're going to have a look at what's been happening, and I want to touch on what's going to be happening or what I think is going to be happening over the next sort of 12 to 18 months, and how fearful or greedy we should be at the moment. So at the moment, we've been, and I'll start with Bitcoin. So Bitcoin's trading at the moment around 43.5K. We've got about a day and a half left until the monthly close, which I'm expecting a bit of a sell-off running into the monthly close to get back to around that 42.3K level, which is the high time frame 50%, as everyone's well aware, because I talk about it every week. I do expect us to sell off into that level over the next day and a half. I think we're not really gonna experience too much gains or losses for the first half of this year. It's just based on history, what's happened historically, and time. I think we need to go through a bit of a consolidation period. To the downside, I think it's unlikely that we're going to get back below 30K. And to the upside, I think it's unlikely that we're going to get above 50, 51K over the next couple months. But leading into the second half of the year, that's sort of where I expect things to start ramping up. Again, we're going to start breaking that 50K level and start looking to test the all-time high towards the end of the year. And that's in line with what has happened historically in the previous two cycles. Moving into towards the end of the year and into the first half of next year, I'll be looking for the all-time high at 69K to be tested and potentially broken, with things really ramping up towards the middle part of next year, probably around Q2 2025 into Q3, and come around the end of Q3, Q4. That's when I think we're going to start. We're going to start forming a top around that period. I have come up with some projections of where I do think the price is going to go, but for me, that's not really too important where the price is going to go. I think it's the time which is most important. We've seen historically around, do have this written down, it's around 1,100 days for a bull market, give or take. And if I recall correctly, that sort of puts us around November in 2025, October, November 2025. I think we're going to be looking to see a peak around that period. And once we do form that peak and the high is formed, that's the start of the bear market. It's not, you can't see that it does, nothing flashes up on the screen saying that we're in a bear market, but the bear market is from the high to the low of the cycle. So, for instance, in the last cycle, the bear market started when we hit 69K, and the bear market ended when we hit 15.5K. So that's sort of very high level discussion of where I sort of think Bitcoin's going to be going over the next sort of 18 months. So I suppose what sort of mindset should we be having at the moment regarding Bitcoin specifically right now? I think if you don't have skin in the game now, over the next sort of three months is a great time to start getting skin in the game. Once we start pushing past that point, I think it's leaving the run a bit too late, and there's a number of reasons for that. The risk reward starts to deteriorate quite a bit, and also there's a lot of countries now, I think most countries in the world at the moment are taxing gains on crypto, and there's quite a number of countries that offer concessions if you hold your Bitcoin or stocks or whatever it might be for a period of 12 months or more, where you get a discount or a concession on the tax that's applicable to your gains. So you really don't want to be getting into the market, I'd say, anywhere past June this year, because you don't want to be left in a situation where you're hamstrung by not wanting to sell because you're going to be subject to higher taxes on your gains come 2025. Am I looking to what I'll start talking about what is it that I'm doing. I won't be holding any crypto. I won't have a single crypto unless it's a stable coin in my account come 2026. My game plan is to liquidate my position entirely next year. At the end of the day, we're in crypto to make money. That's what we put money into it for. That's why we invest in it, is to make gains, and that's essentially what my game plan is. There is some influencers out there, or even just people in general, that are diamond hands and they have a 10-year dream. They're going to buy now and sit on it for 10 years, which is fine. That's a strategy that might work for them. But once you sit down and you can study the cycles, you're not going to time the peak or the falls to the exact minute, to the exact day, but you can pretty well get it to within a month period. And I think if you can do that and sell in those high periods and then buy back in the low periods, with a fair bit of conviction, it's going to put you in a lot more favourable position compared to just diamond handing and sitting on a portfolio for 10 years or so. Moving on from Bitcoin, I do want to talk about stocks. So we'll discuss the SPX 500. My trading view is just on to Kaka at the moment. So SPX has started off the year on fire. It's had a great start to the year. Broke the all-time high. I was hopeful that we were going to break it towards the end of last year. Almost got there, didn't quite. Nasdaq did get there. My conservative marker was around 4,600 points. It smashed that quite easily, which is great. I think we're going to start looking to find a bit of resistance now that we're getting closer to 5,000 points. We should start to expect a bit of a pullback, but it's just going to be, in my opinion, it's just going to be a minor pullback. I can't see anything too significant happening. We're starting to get towards the end of the land cycle, the real estate cycle, and when we start getting towards the pointy end of the real estate cycle, all markets start pumping, and they start pumping significantly. There is still quite a bit of money on the sidelines that's yet to come in. I'm in a couple forum groups where it's essentially just everyday people discussing or talking about finances in general, particularly traditional finance, real estate, and stocks. And the group that I'm in, I think there's over 100,000 members, and there is a lot of people in there talking about what ETF should I be getting into, which stock market is the best to get into. I've got 50 grand laying around. I want to get in. How do I get in? And this just shows me that there is still a lot of money in people's pockets. Don't get me wrong, the cost of living is hitting people pretty hard, but I think the majority of people that it hits hard, unfortunately, aren't really probably the type of people that are getting into stock markets with a significant amount of coin. And I think that the people that can get into the markets are still sitting there with the money to do so, which sort of plays into that I think the markets have still got quite a bit to climb, quite a bit to go. There will be a recession and a blow off top in the coming years, but it's certainly not yet where we're just getting started on a parabolic run in traditional finance. We can also move over and talk about China. Their stock market has been seeing a lot of red. There's been a lot of news stories in regards to China. I think I read recently that Evergrande has been forced into liquidation by the courts over there, which caused a bit of a sell-off yesterday. Unsurprising, and it's two parts. It's unsurprising that Evergrande was forced into liquidation. It was talked about 2 years ago about Evergrande going into liquidation or bankruptcy back then, and they've just been kicking the can down the road ever since. I don't. Evergrande going into liquidation isn't really an issue globally. It's more of an issue just within China. I don't think the impact is going to sort of venture out too much further than China. But there's also been, over 2 years for the markets over there to prepare for this, which is why I think we only really saw about a 2 to 3% drop in the markets. It's good to get these weak players out in order to have proper growth. The president of China has been doing a lot of work to try and make credit easier to come by. How he's been doing that is they recently, I think it was late last week, came out and said that the banks over there only need to hold 50. They can now hold 50% less reserves of cash compared to what their deposits are or their liabilities are, which frees them up to do more lending. And by that, it means that their approval or rules that they follow to approve credit gets loosened. They don't have to go for top tier clients anymore. They can start going for those mid tier clients. In conjunction with that, they also dropped their interest rates by 0.5%, further making credit easier to come by. They've been injecting cash into the economy as well. This is just a round number. I think I remember reading it was about $1 trillion last year got injected into the economy, or printed into the economy. So they're doing all the right things to try stimulate and get things going. There was some negative news about the population decline over there. I think it declined by about 8 million people, which isn't great. You do need population growth in order to have economic growth. Otherwise, it becomes very hard to have economic growth without the population. But 8 million people is a lot. In Australia, that's about a third of our. It's a little bit more than a little bit less than a third of our population, probably around a quarter of our population. But when you're looking at China and their population, 8 million, it's really not much. It sounds like a big number, but when you've got over 1 billion people, it's still significant, but it's not as detrimental. So that you do start hearing about the worst news at the lows. Like we have Evergrande, we have the population issue. There's been a lot of discussion around the deflation environment that China is in at the moment, and all this news is coming out whilst the stock market's at the lows. So there still may be some more downside to come, but I am expecting China to start bouncing soon. And only yesterday, there was I think it was Simon posted up an article about China has that they're looking to get an ETF for Bitcoin approved over there. This, I think, is almost as big of news as what the ETFs in America is. And the reason being is that China it has a lot of liquidity getting injected, so there's going to be a lot of cash running around. And last year I was talking about, I think the bull run for crypto is going to be China led. It doesn't need an ETF to do so, but it certainly is going to help it along. So it'll be interesting to see what happens and how long it takes for that ETF to get approved. Did anyone have any questions so far? Okay, Mystic, good to see you, mate. Well, we've got some comments here. So Mystic's just saying he is interested in hearing the general discussion over what's going to happen to Bitcoin because he's missed the other voice chats. Baldrick has asked, will this be the first crypto cycle during that stage of the land cycle? Yes, it is, Baldrick. So but I'm interested in two parts in regards to this. The first one being how much of the boom of the end of the cycle is Bitcoin. How is Bitcoin going to react to that? Is it going to experience a larger percentage of growth compared to previous crypto cycles, or is it going to be the same? And then even more interesting is going to be how it reacts to the 4-year downturn that precedes the end of the land cycle. So essentially, I'm not sure if you're too familiar with the land cycle, but there's 7 years up, a mini recession in the middle, and then another 7 years, 6 to 7 years up, and then there's 4 years of downturn. And in that 4 years of downturn, that's something that Bitcoin has not been around for. It hasn't experienced it or seen it before. So I'm really interested to see how that affects the crypto cycle. So yeah, that will be interesting. Baldrick has written here, I suspect China population growth will stagnate more as the years go on. Yeah, it's hard to say. Like that, they're really trying to influence the people of China to start having more children. They did have the one child rule for a long time, which has sort of been ingrained into their society. And then they also do have a lot of difference between low income workers, middle income workers, and high income workers. But yeah, I think the president is quite smart over there in how he goes about his work. He doesn't seem to be overly concerned just yet. It could bust, but it could also boom. It's really at that sort of crossroads at the moment. And so Nomad has just written in here that there's a really good YouTube channel in regards to China called ADV China. Yeah, I might have to give that one a look. And they spoke about the population decline a couple of weeks ago. And Belgium's also written here that China now has around 2 billion housing units. Yeah, wow, that's fairly significant. So I'd imagine that quite a few of them are sitting empty, to be honest. Baldrick's just written here that India will surpass China later this century as the dominant population by numbers by quite a margin. It'll come down to economic power of the individual, though. It's interesting that you bring up India, Baldrick. I actually have a little bit of a theory, and it's probably more of a conspiracy theory, if anything, but I wouldn't be surprised to see India become the leading economy of the world. Not tomorrow, not next year, probably not in 10 years, but at some point, I think that they will take over. The US has been leading the economy for roughly around the last 100 years. Prior to that, it was Britain. And there'll be a change. It's a generational change. It takes a long time. But yeah, I think that they're a powerhouse in the making. So Belgium's just talking about China here. There's a huge amount of vacant apartments and there's huge ghost cities. The construction standards are quite low. Yeah. Yep, look, it could be said that perhaps China has gone through its land cycle already, and it's in its downturn at the moment, which is quite a plausible idea. In which case, the worst is probably over, and it's getting ready to take off again. But there is also interesting confluences with the land cycle, and then there's also the 60-year commodity cycle as well. Yeah, that's right, Baldrick. I will get moving on. Was there any traditional finance or currencies or cryptos that you guys wanted me to have a bit of a look at? Oh, Belgium. Sweat and Nia. It's the go-tos, isn't it? All right. Mystics asked here, how long do you think Bitcoin will reach, or how low do you think Bitcoin will reach, or is that premium? You might have missed it at the start, Mystic. Well, I wouldn't be waiting around for under 30 for sub 30k. Even getting into low 30ks, like 31, 32k, it's a bit of a stretch. Definitely possible, but probably a bit of a stretch. I think around mid 30ks, 35k is probably a bit more of a reasonable target. If you're looking to buy more Bitcoin, and this is obviously not financial advice, but if you're looking to get some more skin in the game for Bitcoin specific, under 40k would be where I'd be bagging up some. You just don't know how low it's going to go, and I think that there's a lot more upside than what there is downside over the next number of months. You may have missed the start where I was saying I think for the next sort of 3-4 months between 30k and 50k is pretty much where I see Bitcoin trading between. So I think as long as if you're stacking up below 40k, you should be right. Yeah, it is a pretty big margin. I do have specific levels that I am watching, but yeah, like you do mention, that's probably for premium. But yeah, a bit of a high level look is basically between that 35, 40k, something like that. What sort of comparison are you after, Baldrick? Is it specifically token price or how the token works, or yeah, no worries. That actually sounds like something a bit different. We'll jump into that. I'll just drag up a chart for GMT. Yeah, look, I was involved with STEPN when it was launched initially. I actually got a bit of a small bag of it for I think it opened up at 10 cents. Well, I think it was 10 cents, something like that. I got a heap of it for fuck all, really. And I sold it near the top. No, I didn't get $4.50, but not far from it. And I used to follow it, but for me, I think the tokenomics of it, I just don't like STEPN at all anymore. Before it launched, I was all over it. But yeah, after seeing how the price got manipulated up to $4.50, and then the massive sell off, and it's just been putting in lower lows and lower highs ever since it had that massive capitulation blow off top. There's been a lot of discussion about the people that run STEPN on Twitter. Not so much at the moment. I don't really keep up with it anymore. But I think it was around the start of last year and even earlier into 2022, where there was some shady dealings that were going on as well, which I didn't like. I think as it was pretty much the first move to earn that came out, I think as an initial idea, it was fantastic. But I don't personally, I don't think it's going to get back up to $4.50 again. I struggle with that. I think as a comparison, Sweat has a better community and team around it, and I prefer how the tokenomics of Sweat works over how STEPN works. Yeah, I suppose as a comparison, one of the things that I preferred with STEPN is that GMT is, whilst you can earn GMT, it's not minted automatically. I'm pretty sure you do have to sort of opt into it, otherwise you get GST. Whereas with Sweat is just minted. So they have a bit more control over the inflation of the token. Like we do get a lot of burns with Sweat. But look, I'm not really a big fan of the burns with Sweat. And how they work, I don't feel that the burns that occur are necessarily tokens that were going to be sold. Like, it's not buying the tokens that are going to be sold on the open market. They're from fees generated from rewards or from people that are typically probably not really going to be the big whales that are selling. So they're not necessarily removing that selling pressure from the market. They're removing tokens from the total supply, but that tokens may have never actually turned out to be a selling token. Particularly with the big 2 bill token burn, I think it's great for optics. It's great for Twitter, great for a news event, but I don't think it was ever going to have any effect on the price. But going back to talking about price, I think that there is a lot more upside for Sweat than what there is for STEPN. I'm probably a bit overcritical of Sweat, but that's because it is one of I have bagged it. I am part of the community there. It's it's probably like when you talk about a family member compared to someone that you don't really know. You're probably a bit more overly critical of people that are close to you. Yeah, artificially high starting token count, so it can be artificially lowered. Yeah, that's right. That's right. I mean, there was a massive. I think the starting total allocation was around 20. It was over 20 billion tokens. So, and if there's two bill plus tokens just sitting there doing nothing dormant, well, may as well burn them. I just didn't necessarily agree with there was a lot of discussion about it. Oh, it's a massive burn. This is going to be great. It's not really. It's neither here nor there from a price perspective. I'm just going to read out your comment, Baldic, so anybody that jumps into the video can hear this. So Baldic's just written here, it's like me burning clothes I was never going to wear. I don't lose any wardrobe. That's exactly right, mate. That's exactly right. But it makes for great Twitter posts or community announcements. So, and it's always better to have them burn than having them just sitting there dormant. There's no need to have it, really. So Belgium's just written that 50% of profits are used for buy and burn, though. That's true, Belgium, but not. It's only partly true. There hasn't been a buy and burn for a long time. So I think what they have been doing is keeping the fees that are generated from rewards, opt-ins, from potentially Sweat Hero fees that they're generated, sending Sweat fees that are generated, etc. There hasn't been a buy and burn because I've been talking. Oh, you might know a little bit more than me, but I've been keeping tabs on David on this one, and he was saying that it's been a long time. I think it was over almost 12 months since the last actual open market buy and burn. Unless they're the big whale that's pumping up the price, that'd be nice. Yeah, that's right, Baldrick. They're still burning the unused TGE coins, which I think is going to go on for about another 12 months. I'll just jump into the sweat chart. On the weekly time frame, the weekly time frame isn't really. Just check this comment. I think it was about 4 or 5 months based on rate of burn and what's left. Then it's back to burning whatever else is around. Yeah, okay. So I think that the TG burn should have been treated separately to the normal revenue burning. Just my opinion. The TG coins weren't necessarily sweat. That's if that is the case that they are being burnt instead. The TG coins weren't the Sweat Foundation's coins to burn. They didn't acquire them based on revenue. It was basically coming across a pot of gold at the end of the rainbow. But that is if that is the case. Yeah, I'll get back into the sweat chart here. So looking at the weekly time frame, it's actually not looking too great. Like we've got into our fourth green week, but none of these weekly candles have actually surpassed the last red candle, which was at the start of January. So on the weekly time frame, it's not great. There is high volume that has come in, which is good, but we're still within my parallel channel that I have written. If we do go into the daily time frame, though, the daily time frame does look a lot more better. It does look a lot more stronger. We see some big green candles followed by a little bit of a sell-off, but these sell-offs aren't dropping the prices low. And I have previously showed a bit of a buy zone that I'd identified back at the start of January, and that buy zone was between around 0.0097 and 0.0092. Each time it's come into this zone, it's launched out of it. There's a lot of money coming into sweat within that zone. So it's important that zone gets maintained and kept and not broken below. And if it does break below, it's got to be quick in and out. It can't break below and hold below. If that does happen, then we can start to expect a bit of a change of trend and perhaps a bit of a downtrend to start coming into the market, which would just mean that things are going to be slower, take a bit longer. Not the end of the world. I think the general direction is up, but we just really want to maintain that chopping towards the upside that we've seen since July last year. It hasn't had any exponential growth. Like we're sitting just over 2x from the lows. There is some tokens out there that are sitting, 3, 4, 5, 6x. There's some that are still haven't even made a 2x. So I think we're sort of tracking in the middle of the road, really. Baldric's just ridden 1 day to 10 cents. Yeah, I think that's fairly possible, to be honest. I wouldn't be surprised to see sweat around the 20-cent mark, even perhaps 30-cent mark. I think a lot of it has to do with NEAR as well, indirectly. It's going to have they're not directly correlated with one another. The market caps are somewhat proportionate to each other. So provided NEAR has a decent run, that will then allow sweat to sort of come up with it. Even though I think we did see a bit of a pump on NEAR today, where sweat's sort of been stagnated, but that's fine. NEAR feels like it's building pressure to explode in the future. Yeah, that's right. Today was a baby pump for NEAR. It's still fair way off $4.60 where it made its high. And yes, I'm definitely in agreement with you on that comment about Nia building pressure to explode in the future. I think for a layer one, it's got a lot of potential. Whilst it doesn't have a lot of dApps or projects on it at the moment, which I suppose bring in a lot of TVL or a lot of value, Sweat produces a shitload of transactions, and it's a testament to the Near network for how it handles those transactions. It doesn't very often get too congested on Near, which I think would instill a lot of faith in the technology. So it's just a matter of more projects getting on board, and letting it flourish and grow. Yeah, that's right. I think the last one was around the start of December. I can't remember the project it was that launched, but yeah, all networks get congested. Visa, Mastercard, their networks get congested all the time. Yeah, Belgium's just written that it was due to the Neat token minting and OneDragon a few weeks later. I'll just jump into the Near chart just quickly. Yeah, so Near's sitting around just over a 3x from its lows. It did get up to almost a 5x from the lows. Since it did make that high around the start of January, it has been, or end of December, it has been on a pullback, which we've seen a couple small bounces in between, one of which is the past week. I think we made a low around $2.40, and now we're up sitting at around $3.15. I think that there's still some more blood in the water to be had here. Possibly down to around $2, which if you are wanting to accumulate more Near, I think that would be around that $2.40 to $2 mark would be a good area to bag some more. Yeah, I don't think I have to go into any more detail about why I think Near's great. I will say one other thing actually. With Near, it's one thing I do like is that the total supply is out there. There's no more unlocks to be had. So you can sort of rest assured that you're not going to be dumped on by VCs that are having their tokens unlocked or vesting schedules are getting met. Like you just see some tokens that are out there that they might have 10 billion tokens, and there's only half a billion of them that are currently circulating, and the rest are being unlocked in a vesting schedule. So Baldic has just written, he's tapped for the short term. Yeah, I get it, mate. There's only so much water in the kettle, isn't there? And so the gas fees are redistributed to the proof of stake. Yeah, that's right. I'm not sure if they have a minting function or not. I'm just jumping on CoinMarketCap. Yeah, so the total supply, that they don't have a max supply. So the total supply is 1 bill. The circulating supply currently sits at 1 bill, 4,666,000. So there may be a small amount that get minted to help pay node validators potentially, which is it's not unheard of. But yeah, it's great. It's good to see that the total supply is already out there. The inflation rate for Near, I'm not certain, but I think it's around 8 or 9%, something to that effect. Yeah, that's right. Yeah, 8%. But yeah, with that, I think that sort of draws us to a close. I've run out of time for this session today. I'll make a point of going over Forex on our next catch up that we have, which will be next week. No worries, lads. Always enjoy doing these catch ups. Belgium's just put up the tokenomics of NIA, which I might have a look at after. Um, yeah. All right. Well, thanks everyone for jumping in. And if you guys are tuning into this on YouTube, please like and subscribe, and we'll catch up with you guys next time.